Bitcoin managed to stay afloat. Our on-chain analytics lead me to believe that the market is still in a bullish phase. I also believe that the same can be said of the stock markets at this point. The tariff uncertainty fooled many investors. The current state of the equity market is absolutely delightful, and I couldn't be happier about it. Despite the fact that we are climbing a worrying wall, the great thing about current market cycle is that, unlike the unhealthy bull market of 23 to 24, the market is actually expanding. It is absolutely accurate what Cathie just said. Not only is the market expanding, more and more people are beginning to concentrate on this blockchain hash graph type technology because they understand that it will change the world. This concentration is on projects that are providing incredible real-world utility, whether through physical assets, tokenization, or simple financial instruments that improve people's lives. And there is a flood of institutional capital pouring into the cryptocurrency market, particularly into XRP and HBAR. That is, in large part because of the information that Cathie Wood will be providing in today's video. The reason I'm presenting you this new update is because it features none other than Cathie Wood, who discusses the huge market reset and the likely future of blockchain and cryptocurrency in this interview. I think XRP is going to have a very bright future based on this data, which, well, you can probably anticipate. I'm filled with anticipation for what lies ahead in this place. Sure, use that like button to make sure the whole XRP army sees this, and then we can jump right in. We anticipate that we will emerge from this rolling recession after we have reached a consensus on tariffs, the tax package, and the great, beautiful bill. We anticipate that productivity, the major surprise, and real GDP growth will all benefit from the ongoing recovery that will gain steam as we go from this year into next. We also anticipate that productivity will lead to significantly lower than expected inflation, which will be the second surprise. Many now believe that greater inflation is a direct result of higher real GDP growth. Looking at the past proves that to be completely incorrect. Productivity is a powerful tool against inflation, as it rises in tandem with GDP growth. We anticipate this to be the case this time around, maybe even more so than before, due to the deflationary forces at work in the proliferation of new technologies, particularly artificial intelligence (AI), which is, as we've discussed previously, a highly deflationary phenomenon. Good deflation. Unit sales skyrocket as prices and costs plummet. This is the typical way out of a recession, particularly a rolling recession like this one. We anticipate that this time will also be quite dramatic, but on a grander scale. Accordingly, we believe that this is a tipping point. Furthermore, we anticipate that the unexpected developments may fall short of people's expectations, leading to a smaller deficit relative to GDP than anticipated. Everything I said about M2 is here. M2 is almost at its 5-year growth target. That's what the purple line represents. Even that rate is on the lower end of what we've witnessed over the years, as you can see by looking at this chart that shows history. On a yearly basis, M2 to growth was surpassing inflation in the 60s and 70s, which is another intriguing aspect of this picture. Provided a home for various forms of government expenditure. As you can see, this has moved the target date for when inflation will fall by 18 months, assuming our prediction is correct. The current debate centers on the possibility of a return to the 1970s accommodation period, which was characterized by severe inflation, double-digit inflation, and which Treasury Secretary Bessent has reportedly been attempting to prevent. If our prediction comes true, the current situation will resemble the 1990s somewhat more closely, when money growth outpaced inflation, and inflation actually has a tendency to decrease. The result will be a decrease in the velocity of money. Now, the money velocity, I'm aware I've shown it on charts before, has been in a secular slump ever since the secular decline began. Although there were periodic cyclical ups and downs, the growth rate began to genuinely fall in the late 1990s. Now that we've passed the cyclical hump, the rate of decline is becoming apparent. Thus, that pattern is significant. Assuming it remains in effect, the current rate of money expansion poses no threat to the prevention of inflation. The velocity measures the turnover rate of currency. Why, then, would it say no? If our prediction of lower than expected inflation and subsequent declines in interest rates comes true, then people will likely take the attitude of "I'm not in" a rush to buy anything right now regarding their spending habits. By the end of this year, the cryptocurrency market will have more than 1 billion active users if the current rate of growth continues. Please give that some time to sink in. There is less than 1% of the global population that owns any XRP. Smaller than 1%. Just think about the consequences if suddenly 15% of the global population starts investing in cryptocurrency. Imagine all the money that folks will put into XRP because the numbers are so enormous. The scale of magnitude we're discussing is beyond your brain's capacity to grasp. A scale of that magnitude is beyond the comprehension of any human mind. However, I anticipate that XRP will likely rank among the top performers due to this tremendous growth spurt. So, why is that the case? The most obvious one is that it is designed to be a tool that people all across the globe can put to good use. Now, it is extremely unusual for technologies that do not contribute to the actual world to function so efficiently. Well, there might be a number of instances. Due to its inherent worth as a store of wealth, gold naturally has a high market price, hence this application isn't particularly compelling. Although it does have some practical uses such as in computer chips, its widespread consensus as a safe haven in times of economic uncertainty makes it stand out. Bitcoin may remain relevant in this context, but our focus should be on cryptocurrencies that address practical issues and contribute meaningfully to society. I really like XRP. In addition, H-bar is fantastic, and I predict that, given this growth curve in particular, those will outperform the market as a whole in extreme ways. However, Cathie Wood has additional information to share with us that many of you may not be familiar with. Consequently, I will play that very briefly before moving on to what is perhaps the most crucial statement of today's film, so be sure to stay tuned for that as well. Then let's dive into it. Concern has been our stumbling block. Lots of individuals were hoping that the tariffs and the spat between the Federal Reserve and the President would cause markets to tremble. Naturally, there has been a degree of unpredictability. However, I believe these bull markets to be the most long-lasting. When the market rises despite all the news of controversy, it's telling us something. We assume that lower interest rates are among those signals. The housing numbers are something that a lot of people overlook when looking at inflation statistics. There is a significant delay before they can enter. The unhealthy bull market's concentration on a small number of stocks is beginning to wane, in our opinion, and the market is starting to spread out. One of the most consequential actions taken by this government, in my opinion, is deregulation. Our stance that we have seen a rolling recession has been very constant. In 2022, when interest rates spiked, the housing market crashed, and it has yet to recover. Today, the market is experiencing a slight relapse. Production has not been revived. With the easing of interest rates, the establishment of deregulation, the assurance of tax cuts, and other similar developments, we are of the belief that they will indeed recover.